Yes, let us go to our topic. Today we are going to discuss about journal proper in our day 39 class. Okay? We already discussed about 3 topics. What are they? Journal entries, ledger accounts and subsidiary books. We already discussed about these 3 topics. What is journal proper? We discussed in the subsidiary books. How many subsidiary books are there? We are having 8 types of subsidiary books. Sales returns, purchase returns, bills payable, bills receivable, cash book and journal proper. Right? The last one is journal proper. What is journal proper? The above 7 subsidiary books. The sales, purchases, the above 7 subsidiary books. Which entries are not entered? The entries which are not entered in the above 7 subsidiary books is entered in the journal proper. Credit sales, we write in the sales book. Credit purchases, we write in the purchase book. In the same way, cash transactions, we write in the cash book. Returns, sales returns and purchase returns, we have another books. And bills receivable, we are having one book, and bills payable, we are having another book. Out of these, the remaining entries which we not enter into the entries. So, the entries will enter into the journal proper. It is very important and very interesting topic. Right, let us discuss about the topic. Journal proper. We are having 7 types of journal propers are there. The journal proper is divided into 7 categories. Journal proper is divided into 7 categories. Before we discussing about the difference of journal proper, before we discussing about the types of journal proper, first we have to know the meaning and the types of assets and liabilities. Before we discussing about this, let us discuss about what is an asset, how many types of assets, what is a liability and how many types of liabilities are there. First we have to discuss about that. Right? The assets and liabilities is very important in the journal proper. Right? Let us, without knowing about the assets and liabilities, we cannot do anything in the accounts. First, we have to know what is a asset and what is a liability and how many types are there. So, we have to discuss about that. Right, first we have to discuss about asset. What is an asset? The thing which we have owned. The thing which has owned by the company or by the person. The thing which has owned is a asset. So, asset. This is an asset. This asset is divided into 4 categories. Right? 4 categories. Let us discuss about what are they. One is fixed assets. Second one is investments. And the third one is current assets. And the fourth one is non-marketable assets. Asset is divided into 4 categories. And these 4 categories also subdivided. Right? Mainly asset means we have to say fixed assets, investments, current assets and non-marketable assets. These 4 are the assets and these 4 has been subdivided into some parts. Let us discuss about that. Fixed assets. Fixed asset, plant, machinery, building, stamps, right, land. These all are fixed assets. So, we will know it from an order. Okay, let us discuss in an order. example, we have to construct a company. We have to construct a company. First, what we have to want? First, we want land. These are the fixed assets. First, what we want? We want land. We have to select land. So, first one is land. First fixed asset is land. After that, what we have to do? We have to construct a building. Right? We have to construct a building. So, second fixed asset is building. And next, third one. Third one is plant. For any organization, any company, we have to, after construction the building, and we have to make some plant. We have to introduce some plant. Machinery. After that, we have to attach machinery. After that, we have to arrange machinery. And next one, furniture. After machinery, furniture. And next, stamps, pictures, license. These are the fixed assets: land, building, plant, machinery, furniture, stamps, pictures, and license. These are the fixed assets in an order. By this order, we can't get confused. Land, building, plant, machinery, furniture. These are the fixed assets. These 8 are the fixed assets. Right. These are, we can see these fixed assets. We can see land, we can see machinery, we can see plant, we can see furniture, everything. We can see all of these 8 things. Right? Things. But unseenable assets are there. In the fixed assets, there are 3 assets which we can't see. What are they? Goodwill. Do you know goodwill? What is goodwill? We can't see the goodwill, but it will get some price. By the goodwill, a company will earn profits. Right? By the goodwill, the company earn profits. How? Let us discuss about that. What is a goodwill? I will give you some examples. For example, there is a company is there. There is a shop which has most popular shop in that area. In that city or town, whatever it may be, in that place, the shop is very famous. Due to some reason, some causes, the owner have to sell that shop. The owner sell that shop. The actual cost of the shop is 80 lakhs. The actual cost of the shop is 80 lakhs. And he sell the shop for 1 crore. He sold the shop for 1 crore. The furniture, the area, building, everything contains 80 lakhs. But the owner has sold it for 1 crore. That 20 lakhs is called goodwill. Or by the goodwill, we went to that shop and we will buy something. Right? So that is called goodwill. And next one is patent right. What is a patent right? We can't see this patent right, but we can earn money from this. In the same way, goodwill also, we can't see goodwill, but we can earn money from this. So what is a patent right? What is a patent right means? I will give an example for this also. Present nowadays, there is a medicine for COVID-19. I has introduced a medicine for COVID-19. Right? So if I given that medicine, no one used it. No one trusted. Right? So for that, we will give that medicine to some ex-laboratory. I have given my medicine, my COVID-19 medicine for the ex-laboratory. So they will check the medicine whether it is working or not. If everything is clear about that medicine, then they will give some patent right for us, for me. So they will give patent right for me. They will write my name. So the ex-laboratory, the laboratory will generate the medicine to all over the world. I can't do that, but the laboratory can do that. So I have given my medicine to them and they will pay some amount for me for that medicine. They will pay some amount to me for that medicine. So this payment depends upon the buyer and seller. There is no time limit. The time limit depends upon the buyer and seller. For that period, the agreement period, up to that agreement period, the ex-laboratory has to pay some amount for me. The amount and the period depends upon the buyer and seller's acceptance. Right? This patent right is not only for the medicine. This patent right will apply for medicine, technology, technical. For these things, the patent right will be applied. And the third one is copyright. Copyright. What is the copyright? This patent right is applied for medical, technical and technological things. And the copyright is applied for books, novels. If I have introduced a new book, Accounting Basics by Satyalakshmi, I have the copyright and I have given that book to some Y publishers. I have given that book to some Y publishers. They will publish my book. For that they will pay some money. That is called copyright. For novels, textbooks, for these things, written things, the term copyright. I hope it's clear for you. These are all only fixed assets. These are 8 and this is 3. 11 fixed assets are there. And next one is second one, investment. Investment is also an asset. Third one is current assets. Let us discuss about that. We discussed about 12 things. 11 fixed assets and 1 investment. And the third one is current asset. Right. Third one is current asset. In this current asset, first one is cash. Cash is divided into 2 types. Cash in hand, cash at bank. Cash in hand, cash at bank. Right? Cash in hand is an asset. Cash at bank is also an asset. This is a current asset. And next one is creditors and bills receivable. Creditors is also an asset. Bills receivable is also an asset. I will give one example for creditors and bills receivable. What is a creditor? We have sold some goods. To X without any surety, without any security. So that person is creditor. They have to pay money for us. And next one is bills receivable. We have sold some goods to Y. Sold some goods to X and Y. I sold goods to X and Y. From X, I didn't take any type of surety or security or any bill, nothing. From Y, I have taken a bill. That bill contains the quality about that material will enter into the bill, and the both parties, the buyer and seller, has to sign for particular period. Clear? Bills receivable means taking a bill from Y for some period. The bill contains the quality, quantity, price and everything about that material, including the time limit also. For 2 months or 3 months, whatever it may be, the both parties agreed for that period. So the both parties, the buyer and seller, has to do signature for that bill. So the bill has received by me. X has, we didn't take any type of bill from X. We didn't take any type of bill from X. So we have given without any surety. So if he given the amount, we have got the amount. Otherwise, there is no surety, no money. So that is the difference between creditor and bills receivable. And next one. And the next one is short-term security. Short-term security. The short-term security means the investor invests the money in the business for 1 year. The investor invested the money in business for 1 year is called short-term security. Before that 1 year, the amount should be ended. The amount should be closed. That is short-term securities. This is a current asset, not a... This is a current asset. In this, prepaid expenses, incomes occurred, accrued incomes, these are all the short-term securities. And next one is stock. Stock. What is the meaning of stock? The stock means finished and not sold at the period. The good has been completed. Finished. It's a finished good. So, but the good does not sold. That is called stock. And next one is inventory. Next one is inventory. What is the meaning of inventory? Inventory means the raw material, semi-finished goods and finished goods. These three are combinedly, jointly called as inventory. And the fourth one is non-marketable asset. And non-marketable asset means it is an asset. It is an asset, but no one can buy that. It's unused asset, but it is an asset. Let us discuss about that. First one in non-marketable asset is preliminary asset. Preliminary asset is a preliminary asset. If we want to establish a company, we want the registration for that company. We want to register that company. What things we want to register the company? Memorandum of Association, Articles of Association, Directors List, Acceptance of Directors and Stationery Declaration. These 5 things we want in the registration for the business. What are they? Memorandum of Association, Articles of Association, Directors List, Acceptance of Directors and Declaration. These 5 we want to submit the registrar to register the business organization. If it is a public limited company, for example, we have to start a public limited company. So, the registrar accepted all the 5 things. After that, after the acceptance of that things, the registrar were offered to the registrar ordered us to collect some shares from the public. That is the public acceptance. If it is a private limited company, there is no need for the shares. If all the 5 things are accepted by the registrar, then the organization will be started. But in a public limited company, the acceptance of public is also important. So for that, the organization has to buy some books, applications, stamps, folders, books, applications. These all things are we have to buy before the organization. So the shares has been sold. The organization has been started. So all the things before we have purchased, folders, applications, these all are unused. These are asset only. By that only the company has been started. That is an asset. But it's unused asset. We can't sold that asset. Right? And next, second one is private limited company. In the private limited company, all the 5 elements before we have discussed in the public limited company. In the same way, there is no change. As a public limited company, we have given 5 applications, 5 things. In the same way, private limited company also we are giving the 5 same things. But there is no need for the shares. And next one is discount on issue of shares. What it means? Why we are giving discount on shares? For example, we have started an organization. It's a public limited organization. So for that, we have to take some shares. We have to sell some shares. So no one is interested about our shares. So in that time, for example, a share contains 100 rupees. Share contains 100 rupees. For that share, we are giving discount. We are giving discount. A 10 rupees discount. So now the share is 90 rupees only. The actual cost of the share is 100 rupees. And the sold share is 90 rupees. And the 10% is discount. And the 10% is discount. And the 10 rupees. Right? So this is the discount on issue of shares. And next one. Next one is loss. A company in profit. If a company is in profit, then we have to add that in the capital, in liability. Add the profit to the capital in liability, in balance sheet. So if it is in loss, we will add less. We have to less that amount from the capital. Right? These are the assets, types of assets. Right? We are having 4 types of assets: fixed assets, investments, current assets, and non-marketable assets. In fixed assets, we are having 8 types of saleable assets and 3 types of unsaleable assets. Totally 11 fixed assets. And next, 1 investment. And next, current asset. Cash in hand, cash at bank, creditors, bills receivable, short-term securities, stock, inventories, fixed investments or current assets. These are 8 types of current assets are there. And next, last one is non-marketable assets. Asset, private limited company, and discount on issue of shares and loss. We are having 4. 4 non-marketable assets. 8 plus 4, 12, 13, 14. We are having 24 types of assets. Every business having these 24. It's not necessary. On the 24, we are having these 24 assets only. Some companies has 18 only, 15 only. It's not mandatory for all 24. But only these 24 are the assets. At the next class, let us discuss about the liabilities. Keep watching. Thank you. Hi friends. I hope you like my videos. Thank you for watching my videos. Please like, share and subscribe for more videos. If you have any doubt regarding to this topic, please comment in the comment box. Thank you.